Welcome back, everyone. This is a brief update on the oil market. Dominating the headlines in the oil market is the US-Venezuela recent dispute. The US is not in line with Nicolas Maduro's presidency, calling his activities corrupt and illegitimate. During the past days, the matter has escalated further, with the Trump administration enacting sanctions on the Venezuelan government oil firm PDVSA, as it's known by its Spanish acronym. Other reports stated PDVSA gave instructions to its clients with tankers waiting to load crude from Venezuelan ports to prepay for any trade to take place, or else they will not be provided with oil nor given clearance to leave the port. Even though the situation is getting out of hand and the matter may worsen, oil prices have not been affected until now. According to Saudi Arabia's energy minister Khalid al-Falih, the Venezuela matter has not affected global oil markets, adding also he did not see any reason to take additional measures on the oil market because of the situation. However, he did say an investigation on the matter could be performed in March or April. Crude oil demand in China was noted as picking up strongly as independent refiners rushed to buy before prices climbed further from the low prices reached in the end of last year. Moreover, China's oil import activities have the potential of rising to 9.5 million barrels per day in 2019, increasing with an approximate 4% since 2018. On other news, the Saudi energy minister, in an interview with Bloomberg, made some significant comments which in our opinion are worth mentioning because they could be shedding some light on the future of the industry. To start with, in a question if OPEC is aiming for a price range of $80 per barrel, the Saudi minister replied by saying we are not aiming for a specific price but rather bringing supply below demand for 2019. He followed up by stating Saudi Arabia and similar-minded countries will remain in line with the strategy they adopted since 2017 to control market supply, hinting also that demand for the black gold is expected to pick up towards the end of the first quarter and enter in the second quarter of 2019. However, he also kept a cautious view on political instability regarding countries like Venezuela and Iran, stating the impact of both situations has not been evident yet. The Saudi energy minister said OPEC Plus group had a limit of 10.33 million barrels per day, which had dropped to 10.2 million barrels per day in the current January and could drop even lower in February to 10.1 million barrels. On another front, US drillers added 10 oil rigs in the past week, according to energy services firm Baker Hughes, which may have contributed to a downward pressure on oil prices on Monday. Even though the US remains the largest producer worldwide, the OPEC Plus group has equal influence on the commodities prices and could interfere if the group decides to do so. So we conclude on the fact that prices could be aiming for higher levels, considering, however, the first half of 2019. For more information and trading ideas, you can visit our webpage, follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+. This is Angelos Zitis from IronFX, wishing you solid trading.